The news media, the internet is buzzing with news about a new tax that's hitting mortgage borrowers with good credit scores. Can you believe it?
Good credit, big down payment, okay, but you'll pay for that success. This is pure politics.
Using Fannie Mae and Freddie Mac for these sort of political purposes may not be the best thing to do. And frankly, I think it violates the entire discipline that these two companies have operated under.
This is a middle-class tax hike. This is like a responsibility tax.
Getting penalized for good credit? That's kind of the shocker here.
Yeah, Kara, to put it simply, if you have good credit, your score's between 720 and 760, you'll have to pay more to buy a house. Anything less than that, you'll pay less. And it's all thanks to a new federal rule that's set to take effect next week on May 1st.
Some people are even suggesting that you should purposely tank your credit score to get a better deal. But hold on a second, let's get the facts straight. Starting May 1st, mortgage fees on home loans backed by Freddie Mac and Fannie Mae for people with poor credit will become significantly lower, while fees jump for people with good credit. The former CEO with the Mortgage Bankers Association says this essentially subsidizes those with risky credit.
Lacks integrity. And that's not how we should be making housing policy right now. It should not include tinkering by a regulator for their own, social or political purposes at a time like this.
Fannie Mae and Freddie Mac will enact changes to fees known as loan-level price adjustments, LLPAs, on May 1st that will affect mortgages originating at private banks nationwide, from Wells Fargo to J.P. Morgan Chase, effectively tweaking interest rates paid by the vast majority of home buyers. The result, according to industry pros, pricier monthly mortgage payments for most home buyers, an ugly surprise for those who worked for years to build their credit, only to face higher costs than they expected as part of a housing affordability push by the U.S. Federal Housing Finance Agency. Like, you work your ass off to improve your credit, and then they pull this crap on you. So, here's the deal. Under the new pricing structure called Loan Level Price Adjustments, LLPAs, if you're a home buyer with a bomb FICO credit score of 740 and a 15% to 20% down payment, you're going to get slapped with a 1% surcharge. That's a freaking increase of 0.750% from the old fee of just 0.250%. And this applies to people of all income levels, so it's not just the rich folks getting screwed over. When absorbed into a long-term mortgage rate, the increase is the equivalent of slightly less than a quarter percentage point in mortgage rate. On a $400,000 loan with a 6% mortgage rate, that buyer could expect their monthly payment to rise by about $40. Meanwhile, buyers with credit scores of 679 or lower will have their fees slashed, resulting in more favorable mortgage rates. For example, a buyer with a 620 FICO credit score with a down payment of 5% or less gets a 1.75% fee discount, a decrease from the old fee rate of 3.50% for that bracket. Can you believe the irony? Yes, it's a big change. So why is the government doing this to people with higher credit? Fannie and Freddie technically have a mission to promote affordable homeownership. Fannie and Freddie are government-backed entities that buy up loans from mortgage lenders and either hold them as assets or resell them as mortgage-backed securities. Both have been in federal conservatorship since the housing market imploded during the Great Recession. The two firms are bound by their charters to help improve access to affordable mortgage loans. They do this in part by using the cross-subsidization model, in which some borrowers are charged slightly more for loans while others are charged less. Overall, lower credit buyers will still pay more in loan-level price adjustments or LLPA fees than high credit buyers, but the latest changes will close the gap. So here's the deal. Yeah, it sucks to see fees going up, but don't lose sight of the bigger picture. Don't let these changes discourage you. Keep working hard to improve your credit, and don't give in to the temptation of tanking your score just for a short-term gain. Remember, your credit score is a reflection of your financial responsibility and can have a big impact on your future financial opportunities. Thanks for watching. Please subscribe, click the like button,